Most people think life insurance is something you only use when you die. And honestly, that's actually the problem. Because most people have been taught to think about life insurance as an expense, instead of understanding it as a financial tool. And here's what happens because of that. People are paying into policies for years without really understanding how it works, what they actually own, how the money grows, whether they can access it, or if it was even structured properly in the first place. And the truth is, a lot of policies are built to do the bare minimum. Now, this is important. I'm not saying life insurance is bad. Actually, I think properly structured life insurance can be one of the most powerful financial tools available. But structure matters more than the product itself, because life insurance shouldn't just be death protection. If structured correctly, it can also become a living asset. One of the biggest misunderstandings is term versus permanent insurance. A lot of people think they're the same thing. They're not. Term insurance is temporary coverage. It's usually lower cost. It's designed primarily for protection during a specific period of time. Permanent insurance is built differently. Depending on how it's structured, it can include long-term protection plus cash value accumulation. Neither is automatically better. The real question is, what was your policy designed to do? Most people don't realize some policies can build cash value over time, meaning a portion of the money inside the policy may continue growing. Now again, this depends heavily on structure, because two people can technically own the same type of policy, but have completely different outcomes based on how it was designed. This is honestly one of the biggest things people miss. They focus on the product name instead of the structure behind it, and structure changes everything. Things like how premiums are allocated, how the cash value grows, how accessible the money is, how efficiently the policy becomes long-term. That's why two policies can look similar on paper, but function completely differently. This part surprises people the most, because many people don't realize some policies allow you to access money during your lifetime. Now, obviously, every situation is different, but this is where life insurance starts becoming more than just protection. It can potentially become liquidity, emergency access, supplemental retirement income, or part of a larger wealth strategy. Again, if it's structured correctly. And honestly, this may be the most important part of the whole video. Most people never review their policy after they buy it. It gets set up, filed away, and never looked at again. But your life changes, your income changes, your goals change, your family changes, your strategy should evolve too. And listen, if you're realizing right now that no one ever explained this to you, that's not your fault. Most people were sold a product without ever being educated on the strategy. And that's exactly why we do a complimentary policy review at Yellowbrick. Not to pressure you into buying something new, but to help you understand what you have, how it's working, and whether it's actually aligned with your goals. So if you already have life insurance and you've ever wondered, is this actually set up correctly? You can book a complimentary financial review below. Because clarity creates confidence, and you deserve to understand how your money actually works.